Hi there, you're watching Market Edge on ET Now. I'm Snehi Shah, and with me as always is Harsh Saita. And Harsh, it's been a good day of trade. For the most part of it, we were range bound, but we were managed to sustain those opening bell gains, and in fact, we've also crossed 24,000. So that's the breakout that the market has seen today. Let's take you through some of the top events of the day of trade on Monday. And benchmark indices, they've extended gains for a second consecutive session, with the Nifty surging past the 24,000 mark, led by strong buying in banking and broader markets. Bank Nifty rallied 2.5%, with all constituents ending firmly in the green. Midcaps and small caps outperformed with sharp traction.
Eicher Motors gained after management expressed confidence on premium motorcycle demand and growth and export-led growth, while outlining aggressive capacity expansion plans for Royal Enfield. Meanwhile, Torrent Pharma rose on strong India growth and successful semaglutide launches.
Railway-linked stocks like Texmaco Rail and Jupiter Wagon surged after reports of a massive 40,000 crore rupee railway wagon tender. The proposed procurement of 1 lakh wagons over the next few years is expected to significantly boost freight capacity.
OMCs soar after hiking fuel prices for the fourth time in just 10 days as the West Asia conflict continues to disrupt global energy markets. Petrol and diesel prices were raised by over 2.5 rupees per litre across major metros.
Green Lamb and Century Ply gained after posting strong quarterly numbers backed by better product mix, price hikes and strong housing demand. Managements also flagged rising input costs linked to the West Asia crisis, though most hikes have already been passed on to consumers.
Blue Jet Health rose despite a sharp profit decline after announcing plans to raise up to 1,000 crore rupees through security issuances. Meanwhile, Park Medi gained on strong Q4 earnings and expansion plans, including the acquisition of V3 Healthcare to strengthen its presence in underserved North Indian markets.
ONGC is expected to post a strong Q4 driven by higher crude oil realizations amid elevated global energy prices. The EBITDA is likely to rise sharply sequentially, while softer gas prices and lower crude volumes may partially offset gains.
It's a very good day of trade, right? On Monday, we were extremely range-bound and we closed 330 points higher, and that kind of gives us a great perspective on how markets currently fared on a day like this. We started the week very positive, very range-bound, which is again a positive, and sustaining the kind of gains that we clocked. So all three positive counts. In terms of what lent support, it was the Nifty Bank, and the Nifty Bank came back in a very strong fashion in trade come Monday, when you saw 2.25% higher on the Nifty Bank, some very strong movers. Some of the smaller PSU banks, PNB, Can Bank, Union Bank, did very well for themselves, 3.5% plus on all of those three stocks. But HDFC Bank, SBI, Kotak Mahindra Bank, all of them gained over 2%. In fact, ICICI Bank, Axis Bank also, all of these 4 to 5 large banks gained over 2% in trade. And that's why you saw that momentum very strongly in favor of the Nifty Banking Index. In fact, within the contributors, over 110 positive points, in fact, contributed by both HDFC and ICICI alone. Those two stocks alone pushed the market higher by over 110 points, which is a third of the points gain on the Nifty 50 today. And that kind of signals how banks are being looked at currently. When you're looking at sectors otherwise, Snehi, which were the big gainers? Tell us.
Oh, it was all about banking and financial today. It was the PSU banks, private banks, you had NBFCs, all sorts of lenders that have done really well in trade. So PSU banks were some of the top gaining names in trade today. You've got names like Canara Bank, Union Bank, Bank of India, PNB, UCO Bank, all of them have done well. On the flip side, the only sector that was very marginally under pressure was the consumption space. Remember, on Friday too, this segment was under pressure, and even on Monday, FMCG names like Colgate, and surprising to see Colgate over here as the top loser because the numbers were quite robust. You've had brokerages upgrades coming in. Nomura has upgraded the stock. So you have some good moves on Colgate in terms of reactions from the street. But on the stock front, not much happening. Varun Beverages, Dabur, both of them were under pressure as well. Some positive earnings reactions. You had something like a Crisac that was locked up in 10% upper circuit. We're going to be interacting with the management as well come Tuesday. Ajmera Realty, Saxoft, Blue Jet Healthcare, Greenlam Industries. These are some of the stocks that have done phenomenally well. On the flip side, massive pressure on something like a Poly Medicure on the back of lower than expected earnings. Similar was the case for Yatharth Hospital, Surya Roshni, Sarda Energy. So these were all of the stocks that were under pressure. That petrol and diesel price hike fared out well for names like HPCL, BPCL and IOC. And of course, that 1 lakh freight order that reports are suggesting from the Railway Ministry has worked wonders for Jupiter Wagons as well as Titagarh Rail. But that was all the events to watch out for in the day of trade on Monday. And all of that panned out. But let's take it across to Mithali to watch out for all the cues that you need to be keeping out on your radar for Tuesday, which is also the monthly Nifty expiry. Mithali.
Right, talking about the market cues and also the important corporate developments. So investors will be watching out for the Nifty expiry because in a rare event that this week has, the Sensex expiry is also on a consecutive day, which is Wednesday. So this Nifty expiry is going to be important. Meanwhile, globally, if you see earnings season, it continues with results expected from Xiaomi as well as Miniso. Back home, it's another busy trade earnings day for Indian markets as well. Among the Nifty companies, all eyes will be on ONGC. Street's focus will be on the crude realization, production numbers, and also commentary on the energy demand. Several other prominent companies like IRCTC, Gujarat Gas, Siemens, JK Tyres, Senco Gold, Gujarat Fluorochemicals will also be presenting their Q4 results. Moving to the corporate actions and board meetings, so Union Bank of India board is set to consider another fundraising round, a development that could remain in focus in the banking industry. Pondy Oxides and Chemicals board there also may consider a stock split of its 5 rupee equity share, a move typically aiming to improve companies' stock liquidity and also retail participation. In another key development, lock-in restrictions ends for shares of Gaudium IVF as well as Women Health involving around 4% of its outstanding shares. And finally, US Secretary of State Marco Rubio concludes his India visit with markets monitoring the diplomatic commentary and bilateral discussion for the broader geopolitical cues.
Thank you so much, Mithali. What we'll also have our eyes glued on is how crude moves, because that 4% downtick in crude led to positive cues on the morning of Monday, and that led to a very decent move on our own Indian markets. The other piece that you want to continue to monitor is that on Monday especially, we won't have any cues coming in from US markets outside of futures, of course. So futures will give us the indication as to how US markets are playing out, because Monday is not going to be a working day for the US. You've got that Memorial Day holiday for US markets, and therefore when we open up come Tuesday, we won't have those cues coming in, but we'll still have the futures in terms of to track. But let me go across to Avi. He's here with all of the stocks that were buzzing in trade on Monday.
Let's discuss some stocks that are buzzing in news, starting right off from Texmaco and Jupiter Wagons, which are buzzing on account of media reports that suggest that Indian Railways is going to come out with a mega tender of 40,000 crore rupees to procure 1 lakh freight wagons over the next 2 to 3 years. The orders are expected to start coming in from Q2 FY27. Texmaco alone has the capacity to produce 15,000 wagons a year. Talking about the next stock, we have Eicher Motors with a very good set of earnings with 6,000 crores of top line and 1,500 crores of PAT and a margin of 25%. The management is very bullish on the premium segment for Royal Enfield, and both urban and rural demand seems to be playing out well. Talking about the margins, they have increased their prices in April to offset the impact of cost increase of around 3.5%. They are also investing around 950 crores in the Cheyyar facility to expand the capacities to around 2 million units by Q2 FY28, which currently stands at 1.4 million units. Talking about our next stock, we have Blue Jet Healthcare. Although the company has posted a weak set of earnings, the stock seems to be buzzing in the positive on account of news that it is planning to raise around 1,000 crores via securities. Next up, we have Ajmera Realty, which is buzzing up almost 15% on account of strong earnings. It has achieved its highest ever annual sales and collections. It has also exceeded its pre-sale guidance of 1600 crores, with actuals coming in at around 1700 crores. They have launched 4 new projects in FY26 with a GDV of around 3000 crores. Up next, we have Cryzek with a very strong set of earnings with EBITDA up 40%, profit up 50%, and the margins for Cryzek have expanded by 4.5%. Talking about our last stock, we have Ashok Leyland, which has received an order to supply 715 vehicles to VRL Logistics. Over to you.
Thanks so much for taking us through that. So that's a list of all the stocks to watch out for. In fact, they were on our radar on Monday, but we'll see if there is any follow-through action on most of these names on the back of earnings on Tuesday as well. But we were speaking about crude some time ago, and that sharp cool-off that we've seen, how sustainable is that? We interacted earlier in the day with Mr. Richard Radolia, the Chief Executive Officer at Matrix Global Holdings. He expects crude to be in the $71 to $110 per barrel range, and he also believes that crude will fall by $8 or $9 on the Iran peace agreement. Listen in.
Market itself also does that in the form of volatility. And currently, the market's volatility believes that there's going to be a trading range between, I'll use WTI right now at $91, a trading range between $110 and $71. And sure enough, that's about the range we've been in for a while. We find in the next 2 or 3 days that Iran and the U.S. have come to some agreement. I would imagine this market will move down another $8 or $9 relatively quickly. At that point, it'll go back to the same idea of volatility. How much do you believe it's going to? How long is this going to last? Is there going to be a hiccup? And that's going to keep volatility in the market in the marketplace for a long time.
Okay, that's the word coming in, and the expert opinion on where crude prices could be heading in the near term, especially if there is a peace agreement between the US and Iran. But shifting focus, let's get stock specific. And following its Q4 numbers, Hindalco Industries MD Mr. Satish Pai said that the company is expecting the margins in the first quarter of FY27 to be higher as compared to the last quarter, with cash flows to turn positive by the end of the next financial year. Listen into his growth outlook for the company.
Going forward, if you look at Q1, the LME prices are already above Q4. Of course, some amount of inflation of costs is happening, but it would be fair to say that our margins in Q1 will be better than in Q4. So the Aditya FRP is, as you said, ramping up. I think by the first half of this year, a large part of the operations would have stabilized there. I think that, if the demand holds good, we should be in that $250 to $300 EBITDA range. I think we exited at about 220, 250. So the downstream EBITDA per ton, we are hoping next year with the full ramp up will be better. In Q4 of FY27, we will turn cash flow positive because most of the capex spend will happen in the first 3 quarters, as well as our EBITDA and profitability would have then fully ramped up as Oswego is fully ramped, back in operation. So that's our confidence that by Q4 of FY27, we will turn cash flow positive. Though for the full year, we will be negative cash flow largely because of the Bay Minette capex.
Okay, so that's the take with regard to Hindalco. Let me go across to Nagaraj Chetty, joining us, Senior Technical Research Analyst at HDFC Securities. Great having you, Nagaraj. Give us a sense, how are you viewing the moves on Monday, and what's the expectation like? Is there now far more positive cues coming through, especially on charts?
Chartically, Nifty is looking positive. What we have seen recently is the range-bound action over the last couple of weeks. Market was trying a bit to break above the range. Today, it was the day that market has broken above the hurdle and closed at the higher levels. This is technically indicating a decisive breakout of the range movement. I think the upside momentum has started to begin with the range breakout, and more upside is likely in the near term. So the next upside resistance to be watched next over target for the Nifty to be watched around 24,300 to 350 levels, where the next hurdle could come in.
Okay, and what about the Nifty Bank, Nagaraj? That has really shown strength today. Do you believe that it can last and further upsides from here?
Yes, I'm expecting further upside. In the last couple of sessions, Nifty Bank has outperformed the benchmark Nifty and looking very positive. It has placed at the edge of breakout of the downsloping trend line technically on the daily chart, looking very positive than Nifty, this bank Nifty. So I'm expecting further upside. Even 56,800, 57,000 is going to be the target for the bank Nifty, at least in the next week.
Nagaraj, hi. What would be your stock recommendations to our viewers this hour?
Hi, good afternoon. Yes, I have a two stock recommendation from my side. First one is Sumitomo Chemical. Chartically, Sumitomo Chemical has been in a constant up run over the last couple of weeks. High tops and bottoms on the chart. The moving average support and the trend line support has been intact and currently placed at the higher levels. Overall chart pattern is looking positive. I'm expecting more upside from here onwards, and one can look to buy at this point of time. Currently closed around 480.80. The immediate target would be around 505. One can place a stop loss at 465. Second one is from insurance front, ICICI Prudential Life Insurance. This stock was moving in a downtrend, recently made a double bottom somewhere around 500, 490 levels and bounced back very well from the lower levels. Currently showing some accumulation pattern. I'm expecting an upside breakout from here onwards. Today's close is around 527.50. One can look to buy at this point of time. Immediate target would be around 555. One can place a stop loss at 510.
Some of the movers today, and Eicher Motors, for example, and HDFC Bank, for example. Nagaraj, what are the levels on these two counters in particular?
I won't be able to comment on HDFC Bank due to compliance, but Eicher Motors, yes, witnessed the sharp breakout. After the downward correction, we have seen some huge gap on the chart and 6.5% up move. The overall sentiment has turned into a positive, and more upside is likely for this Eicher Motors, and 7,800 is going to be the next hurdles to be watched at least for the next 1 week.
And Adani Enterprises, Nagaraj. I apologize for that ask on HDFC Bank.
Yes, no issue, Ash. Adani Enterprises has been a continuous uprun over the last few months. What we can observe is highest top and higher bottoms on the daily chart. After showing a consolidation movement or a range movement in the last 5-6 sessions, this stock has broken above that range movement, indicating a sharp upside momentum on the upper side. More upside is likely. 3,000 is going to be the next resistance to be watched, at least for the next 1 week.
Okay. Nagaraj, from the broader end of the market, there has been a report circulating that is suggesting that the government is looking for a big procurement of wagons, precisely 1 lakh unit over the next few years. Now, on the back of this, you've of course had Jupiter Wagons as well as Titagarh Rail, Texmaco, all of them have done well. Anything looking good from the railway pack?
Texmaco is the one which has bounced back from the lower levels, Tex Infra. What we can observe is a consolidation base building up at the higher bottom and the attempt of breakout in today's session. Currently trading around 113.32. I think it's looking very positive at this point of time. A sharp breakout is likely in the next few sessions. 120 is going to be the next hurdle to be watched once it moves above from here onwards.
The other one was Ajmera Realty from the realty space. So you got some very, very strong numbers. And in terms of the top line, 450 crore plus. Just for viewer perspective, that came out during trade on Monday. But give us a sense, Nagaraj, within the real estate pack, and you saw a very strong move, 9% higher. I know relatively small name, Ajmera, 8% move, of course, at close. But within the realty pack, anything that you're liking as realty as a pack? Are you liking it? Would you play the index? Would you play any specific stocks? How should one play it?
I think I'm expecting upside in the banking, financial, and rate sensitive, including realty. And in realty pack, overall realty is the one we have seen some higher bottom reversal around 1600 level few days back, bounced back very well, and currently moving towards the next resistance of around 1800 level in the next at least in the next couple of weeks. Chartically looking very positive at this point of time. Volume has also broken out during the upside breakout.
Nagaraj, we've spoken about a bunch of sectors. What's your reading on IT? That one has been a volatile sector, and usually when the market is tanking, that sector continues to do well. Do you believe that could be a good hedging strategy, something to look at as a defensive play, or would you avoid?
Right now, I'm not expecting any bigger up move for the IT as of now. It has bounced back very well from the lower levels, showing some consolidation. Some more consolidation is likely. Right now, I'm expecting in this space, banking, realty, financials, and rate-sensitive sectors are likely to outperform.
Thank you so much, Nagraj, for coming in and giving us those views. Really, really appreciate, and kind of gives us how to play the markets going forward. But clearly and evidently bullish, Nagraj, with regard to markets, both chartically as well as sector specific. Of course, he gave us his picks as well. Let me go across, in fact. Karan standing by. ONGC expected to come out with Q4 numbers. Let's quickly have a look at what to expect.
Well, ONGC from the Nifty pack is all set to release its Q4 numbers. Ahead of the earnings, let's take a look at what the street is expecting. The revenue is seen at 36,132 crores, implying a 15% growth sequentially, whereas the EBITDA is seen at 17,900 crores, implying a 17% growth quarter on quarter. The street is expecting the EBITDA to increase 17%, largely on account of higher crude price realization. The net crude price realization can be 24% higher sequentially, while the gas price realization can decline by 1.6% on lower APM and NWG prices. From a volume standpoint, the overall crude oil sales volume could be around 4.7 million metric tons, suggesting a 2% decline year on year, and the gross crude price realization is seen at $77.6 per barrel, indicating a 26% growth on a sequential basis. Moreover, the EBITDA margins are seen at 49.6%. On that note, do watch out for ONGC.
Okay, Karan, thanks for taking us through that. So yes, one of the few Nifty earnings left, and ONGC is one of them. So watch out for that and the earnings on Tuesday. We're shifting focus. One pack that was doing really well in the market today was the entire OMC basket. You had HPCL, BPCL, IOC, all of them did well because there has been yet another price hike, a fourth price hike in the span of 10 to 12 days of about 2.83 rupees on petrol and diesel across the country. And that's the reason why some of these OMCs have done well. Now, the Finance Minister, Nirmala Sitharaman, said the government has taken a revenue hit of over 1 lakh crore due to the excise duty cuts on petrol and diesel aimed at reducing the burden on consumers. The FM also defended export duties on fuel exports, saying they were necessary to ensure domestic fuel availability and protect supply chains. Listen in.
The government is estimated to take a revenue impact of over 1 lakh crore on this one score in the year 26-27 because of this one decision. So the burden for a considerable period because of that reduction in excise duty had been taken away from the shoulders of the common people because government has foregone or taken the burden of 1 lakh crore rupees on its shoulders. To ensure domestic availability of fuel, export duty or cess was imposed on exports of petrol, diesel and aviation turbine fuel. So we are not allowing export because it's earning foreign exchange without attending to the domestic market's needs. In order to ensure that, we have imposed a duty on exports.
Okay, so that's with regard to crude, and you want to keep your eye out on that crude basket because that will also be one of the key cues that we look out for when we open for trade come Tuesday. But very quickly, I'm going to also mark out that European stocks have done well, Asian stocks have done well in trade today as well. We saw some very decent moves coming in, and of course, we'll keep our eye out on the US futures because that will also signal as to how markets will respond come Tuesday, how our own Indian markets will respond come Tuesday. We're completely timed out on this edition of Market Edge from Snehi, myself, everyone who puts this show together. Thanks so much for watching. Stay with us here on ET Now. More action to follow.